Well, good morning. I'm Jagendra Rana. So, product of the day is microinsurance in India. The topic is microinsurance in India. So, the microinsurance is specifically intended for the protection of low-income people with affordable insurance products to help them cope with and recover from the financial losses. The need of insurance for underprivileged section cannot be avoided, as this section of society is more prone to many risks which are ultimately leads to incapacity to face such uncertain situations. Hence the role that microinsurance plays becomes inevitable. India has been seen to be a very exciting market and a pioneer in setting out the regulatory framework for microinsurance in the world. Microinsurance promises to support sustainable livelihood of the poor. Liberalization of the insurance sector and government schemes has created new opportunities for microinsurance to reach the vast majority of the poor, including those working in the informal sector. Even so, market penetration in microinsurance is seen to be low in India. The market so far is seen to be largely supply driven. Among others, the product design, ease of underwriting, distribution, awareness creation, easy premium payment system, simple claim processing, and understanding and use of new age technology would be key for success of the microinsurance market. So distribution is the most critical link in the insurance value chain, especially for microinsurance where the customer is semi-literate or even literate or even illiterate, has limited financial resources and is largely inaccessible. So distribution becomes even more crucial in case of voluntary microinsurance since it also involves a hard selling element. On the other hand, due to the low insurance penetration among the low income segment, there also lies a huge opportunity both in terms of business as well as extending financial protection to those who need it the most. Various efforts have been made in the past to address the distribution challenge in microinsurance. The concept of microinsurance as introduced in 2005 was aimed to attracting more intermediaries to this space and leverage upon the connect enjoyed by grassroots organizations like cooperatives and SHGs, small home groups. So with a large section of the low income segment, although this initiative succeeded in enrolling large numbers of microinsurance intermediaries, the volumes continue to remain modest, both in terms of premium collection as well as lives covered. So the major challenges in microinsurance distribution are a small ticket size coupled with high transaction and service delivery costs, absence of a business model that can attract good intermediaries, capacity building of intermediaries, lack of basic awareness and knowledge of how insurance works. And for further clarity, see microinsurance regulations. Because what are the governing provisions for microinsurance? The Insurance Regulatory and Development Authority of India, Microinsurance Regulation 2015 are there. As per the regulations, microinsurance policy is an insurance policy sold under a plan which has been specifically approved by the authority as a microinsurance product. So as per the regulations, microinsurance product includes a general microinsurance product or life insurance micro product or health insurance product. Proposal form and all marketing materials in respect thereof is included in micro segment. So as per the regulations, the micro insurance agent means the entities who are appointed as micro insurance agents in accordance with the regulations. For example, non-government organizations, popularly called as NGOs, self-help groups, means SHGs, a microfinance institution, MFI, RBI regulated NBFCs or MFIs, district cooperative banks licensed by Reserve Bank of India, subject to being eligible as per extant norms of Reserve Bank of India. Then regional rural banks established under Section 3 of the Regional Rural Banks Act 1976, subject to being eligible as per the extant norms of Reserve Bank of India. Urban cooperative banks licensed by Reserve Bank of India, subject to being eligible as per extant norms of Reserve Bank of India. And primary agricultural cooperative societies, other cooperative societies registered under any of the Cooperative Societies Act, and then business correspondents appointed in accordance to the extent RBI guidelines with any of the scheduled commercial banks. Now the question is, how appointment of micro insurance agent is done? Because a micro insurance agent shall be appointed by an insurer by entering into a deed of agreement which shall clearly specify the terms and conditions of such appointment, including the duties and responsibilities of both the micro insurance agent and the insurer. So the micro insurance agent may work with one life insurance company, one general insurance company, one agriculture insurance company of India Limited, and with any one of the health insurance companies registered with the authority. At least 25 hours of training by the insurer in the language recognized by the Constitution of India to all micro insurance agents and their specified persons in the areas of insurance, selling policyholder servicing, and claim registrations will be given. So, provided those micro insurance agents who are appointed to distribute general insurance policies to MSME sector and in accordance to the regulations shall undergo additional 25 hours of the training at the expenses of the insurer. So refresher training, not less than half of the prescribed number of hours of training shall be imparted as on the expiry of every spell of 3 years from the date of entering into the agreement. Now, the total remuneration. So as per the regulations, the remuneration including commission shall not exceed the limit as stated in the regulations. For life insurance business, single premium policy is 10% of the single premium. Non-single premium policy is 20% of the premium for all the years of the premiums paying term. For general insurance business, 15% of the premium. And for group insurance product, the insurer may decide the commission subject to the overall limit prescribed in the regulations. So, all micro insurance policies may be reckoned for the purpose of fulfillment of social obligations. And where a micro insurance policy is issued in a rural area and falls under the definition of social sector, such policy may be reckoned for both under rural and social sector obligations separately. So the regulations allow tie-up between life insurance and general insurance insurers in offering micro insurance products as per the procedure laid down in the regulations. Other than individual microinsurance agents, all other microinsurance agents are allowed to appoint specified persons with the prior approval of the insurer for the purpose of discharging all or any of the functions stated in the subsection sub-regulation 3 of regulation 5 of the regulations. So as per the regulations, the minimum group size is 5 and the sum assured under an insurance product offering life or pension or health benefit shall not exceed an amount of rupees 2 lakh. So as per the regulations, maximum amount of cover in general and health insurance should be like this: dwelling and contents of livestock or tools or implements or other named assets or crop insurance, maximum amount of cover 1 lakh, term of cover 1 year. Health insurance contract rupees 1 lakh, term of cover 1 year. Health insurance family group for family or group 2,50,000 1 year. And personal accident for individuals, families and group rupees 1 lakh. So as per the regulations, the annual premium shall not exceed rupees 6,000 per annum in a micro variable insurance product under non-linked, non-par platform. No insurers shall offer micro insurance products under the linked platform. So a huge segment of the Indian population is underprivileged. Due to this lack of privilege, they do not have the capacity or access to benefit from various financial services such as banking, insurance, credit, etc. This is where concerned authorities step in and help such sections of the society to empower them and grant access to financial products and services. So microinsurance is one such effort to help people belonging to the low income group. So microinsurance is a category of insurance policies designed for the betterment of the economically vulnerable population of the country. This category has been created by the Insurance Regulatory and Development Authority of India. So microinsurance is governed as per the IRDA Microinsurance Regulation 2005. Such a policy can belong to general insurance as well as life insurance category. However, the defining quality of such policies is that the sum insured offered by them is equal to or less than rupees 50,000. So microinsurance can enable some sort of insurance cushioning for the economically vulnerable population. Such plans can provide a sense of security to low income people that are unable to afford the popular form of insurance. As far as types of microinsurance plans are concerned, in general insurance, products cover health insurance, personal accident and assets such as livestock, hut, etc. The product can be availed at any individual or a group basis. And life insurance plan can be term or an endowment plan. It can be purchased at an individual or a group level and without an accident benefit. Such plans can also be related to health insurance. So the biggest advantage concerning microinsurance is that it offers the opportunity for the economically vulnerable section of the population to buy insurance at a low cost. So because of buying microinsurance policies, they can receive financial assistance during challenging times. This will result in the safeguarding of their savings, which are usually on the lower side. Thank you. Thank you.